Hello and good morning, and welcome to Saxo Bank's Market Morning Call. My name is Christian Blobia, and today is Thursday, the 7th of February. The overnight bullets, we had the US unit labor cost out yesterday, actually better than expected. We had them out at 2.1% versus 3.5% expected. And then we had the US non-farm productivity out at 1.8% versus 0.5% expected, also better than expected. So the numbers out from the US yesterday was out a little better than expected, despite the negative sentiment in the US economy ongoing. Yesterday we also had the US crude oil inventories out, and they were out at 7 million barrels versus around 2.6 million barrels expected. That was a lot better than expected, which means that the surge on the US US oil supplies is much less than expected, and on this crude oil traded lower. Similarly, we had the Kiwi unemployment out at 3.4% expected versus 3.6% expected. That was also a little better than expected, but Kiwi dollar did not move much on this account. Market developments. Euro dollar is currently trading in the middle of a range as the market waits to see if the ever hawkish Trichet will step down on his hawkish tone, or he will continue this trend. Stock, we had a mixed session yesterday in Europe, but the US in the US session we had a trading session. We had a session where trading was lower. We traded lower, mainly on two things. That is the Macy's, that is the department retail store chain was out and saying they will cut 2,300 jobs, and that Fed's Plaza was out and saying that we will cut down on the aggressive rate cuts and see how inflation is picking up. Commodities all under pressure after the US inventory is massive build, and precious metals is retrieved some color on expectation on dollar weakness. So what is going on? Today is the big rate day, that is the ECB and Bank of England will announce their interest rates. It's widely expected that the BOE, that is the Bank of England, will cut interest rate by 25 basis points up to 50 basis points. However, it's also widely expected that the ECB, European Central Bank, will keep its rate at 4% as it currently is. But as always, the very important things is how Trichet will look upon inflation, whether he will stand hawkish on the interest rate, that is the looking inflation as a risk to the upside, or whether the inflation is sort of eased and he will be looking risk on inflation to the downside. US stocks fell yesterday after Macy's were out and saying they'll cut 2,300 jobs, and they cut down their sales growth estimate for 2008. Also, the US stocks were trading lower on the Fed's Plaza, who's the vice chairman, were out and saying that will stand back in a while for the aggressive rate cuts and see how inflation is picking up. Plaza is expecting that the core inflation will be between 2.0 and 2.5% in 2008. Crude oil was trading little change after yesterday, where it fell more than $1 on the US government report, showing that supplies rose than most in almost 4 years. With these data, it suggests that gasoline and distilleries is more than adequate. That is the supply, of course, and a product-driven rally in all the near term is highly unlikely. The calendar today is that we at 1100 GMT has German factory orders out. This will be important for the movements in DAX. And at 12 GMT we have the UK BOE interest rate announcement. At 12:45 GMT we have the ECB interest rate announcement, and at 45 minutes later, that is at 13:30 GMT, we have Trichet's conference, and he speaks on the ECB's view on the interest rates. At 13:30 GMT we have labor market data out from the US, that is the initial jobless claims and the continuing jobless claims. And as you may remember, we saw on Friday that the non-farm payrolls were out at minus 17,000 versus 14,000 expected. That is a lot worse than expected, which make especially stock markets go down. So there will be some focus on these labor market data out today, even though they are rather volatile. So what is going to be looked upon is the trend, whether the trend is continued. Furthermore, we have pending home sales out from the U.S. also at 1500 GMT, and we expect that the contracting U.S. house market will continue this trend, as most other economists. Finally, at 1830 GMT, we had the ICSC chain store sales out, and this will be an important indicator with the Macy's announcements yesterday, as well as how we can expect the retail sales to look when it's released in next week. The upcoming events for the rest of the week: tomorrow we'll have the Swiss CPI, and we'll have a Canadian unemployment rate out. Also, Canadian housing starts is published released tomorrow, and then on Monday we'll have a string of CPIs out from Norway and a string of PPIs out from UK, as well as the house prices is released in UK on the UK on Monday. Also, we have the Canadian house price index released Monday. Today's FX trading strategies is that we are looking towards a euro-dollar trade, where we are seeing support at 145.92 and resistance at 146.90, and this is a breakout play. The downside action stopped yesterday at 0.61 Fibonacci level at 145.92. A more dovish stance from Touché could mean we will try at 144, bottom of the range. Currently the technicals are a bit uncertain on this, but look for a breakout play at the support at 145.92 and the resistance at 146.90. Today's equity trade is that we're selling British Sky at 575 in the entry range of 575-580. We're initially targeting 530, and the final target is 490. We're keeping a stop loss above 600. And what we especially like about this trade is the current downtrend in British Sky. And in futures, we are selling the S&P 500 at within the entry range at 1345.50. 1345 to 1350. We're keeping a stop above at 1355, and we're targeting 1310. Currently, it trades around 1326. So what we expect is a upturn in S&P 500. This is mainly based on technical analysis. And once it reaches the 1345 and 1350 level, we'll go in and sell. That was all for Saxo Bank today. Thank you for joining. We'll hopefully see you tomorrow. Goodbye.